Top three things in my notebook this morning. Europe, number one. Number two, the VIX. And number three, the S&P 500. Again, Europe, if you look at it for what it is, you had another big move yesterday that got a lot of people excited on he said, she said about them buying, I guess, corporate debt and buying this, that, and the other. Again, these moves can only take you so far. Don't forget that the first Draghi drugs introduction got you like a 3-day move in Europe. Some might call it a 5-day move, but again, to lower highs. And then this one lasted a day. So again, congratulations if everyone nailed it. I certainly did not nail that. Again, how can you risk manage people coming out arbitrarily with the next central plan that is only going to lead you to more of what has not worked? That, of course, is the definition of insanity, and that's what's going on in Europe. Now, VIX, again, the VIX has a risk range that is as wide as it's been since November of 2007 in my model. In these notebooks, I have written these down for 15 years. Again, looking at the risk range and volatility, it's now 15.09 on the VIX, that's the low end of the range, to 28.26. So in other words, our model would say that it is probable that volatility trades in that wacky, wicked, wide range. That is a clean-cut leading indicator of negative things to come, again, for what? S&P. So that's the final thing, S&P 500. What is the best probability decision you can make within the risk range? S&P 500 has 4.6% immediate term downside. This could happen intraday, and I would consider that not surprising. A lot of people go, what? The futures are not down that much. I mean, look at the process. 1830, 4.6% downside versus 0.3% upside. Very asymmetric setup from a probability perspective. Again, I suggest you respect it, and those are your top three things.